So welcome to Marc Chapman. Thanks for being with us. What's the main difference between hedge investor Principia's investment approach and other funds investing in European equities? And what do you think is your main hedge?
Well, essentially, we're very focused on stock-specific risk within the companies that we look at. So we address companies where we think there's a lot of change in the nature of the company at a specific stock level rather than in a thematic or top-down level. And then we investigate very thoroughly those companies and look for things where there's a lot of equity upside based on this change. And we spend a lot of our time covering a lot of different companies in different countries and focusing on those where we have a very high conviction view. So concentration of the portfolio is one aspect. We only maybe have between 25 and 30 stocks in the fund in total. And then in terms of trade in the portfolio, we're very active. It takes advantage of volatility and selling into strength and buying into weakness in the names that we like. So controlling volatility and focusing on high conviction bottom-up stock picking are the main differentiators of the fund at the moment.
Your hedge fund has been having very good risk-adjusted returns since inception, realized in very different market scenarios. Do you expect your strategy to be fully and easily replicable at Uchi's format?
Yeah, essentially the strategy relies on fundamental stock picking, but also control of volatility through opportunistic trading in and out of names that we know quite well. And in a lot of cases, they're quite liquid names, so a large proportion of the portfolio is in mid and large cap European companies where liquidity is not an issue. So for a UCITS investor who has a different liquidity requirement to an offshore investor, the fund can almost perfectly be replicated in that format based on its current structure.
How is the portfolio currently positioned? What are the areas of the market where you see and where you find most interesting opportunities? And what are the main risks?
Yeah, during 2012, we found the most interesting companies in areas where there's structural growth or where the company has a specific growth rate because of internal dynamics within the company. So for instance, in the technology sector, there's a lot of change in technology. People are using more smartphones, people are accessing the internet in different ways. That's presenting a lot of opportunity for companies both in the hardware and software space that enable that change. Also, there's other structural growth areas of the market in various markets where we can see organic growth well in excess of what the European economy derives. And so we've been focused on those during 2012, and they've been the main performers. The main risk for the overall strategy is that the macro area becomes so dominant that stocks become basically all correlated, and that stock differentiation doesn't work for a while. This has occurred at brief times in the past. Usually it's only for a brief amount of time, but that's the major risk to the overall strategy, I would say.
Thank you very much.
Thank you.